Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES balanced in a very narrow range, but held above the 96.5 to 98.5 support, which tells us that the buy side is still in control. And off the open, that's the area we're going to be using to gauge the short-term strength or weakness of the market. So if the market at this point can hold above 96.5 to 98.5, then we could get an upside break, and the market can make yet another new all-time high. So on the upside, we have that resistance at 2075 to 2275, but that's pretty much the all-time high. So it's not really a strong area of resistance. It's near the all-time high, and if we continue balancing above 98.5, then there's potential for an upside push to a new all-time high. Now on the downside, if we break below 96.5 to 98.5, then we can quite easily go down to the gap fill at 95, and we'll probably, at the very minimum, test 91 to 93 at that point. Now, that's a spot where buyers can technically still be active, and we have to understand that the market is running on very light volume, and typically when the market's running on light volume, you're not going to get a lot of range expansion on either side, right? So it's important to monitor the volume throughout the day and then see if a breakout or a breakdown happens on above average volume. Because if it's if the volume situation remains pretty light the way it has been for the last few sessions, then there is less probability of follow through and lower probability of a wide range. So that means that even if we break below this 96.5 to 98.5 support, we could just stop at 91 to 93 and then just either balance again or balance and then break lower, and that requires a little bit more patience on your entries, or you have to be in anticipating the move ahead of time, right? So if you see signs ahead of time where internals are really diving, or momentum is clearly on the downside, and you're anticipating a break of 96.5 to 98.5, then you can position yourself in advance, and that idea works out fine. But you have to be careful on continuation trades, right? Where the break happens, and you try to get in, but at too low of a price, or you try to get on board a long move at too high of a price, and then the market starts kind of chopping around, and that can result in some needless losses in a low volume, low opportunity market, right? Which is basically what we're in right now, low volatility and low volume. So when you have these narrow ranges, you have very limited opportunity, and you have to take that into account, and actually be less active yourself, right? So be very selective with the trades that you do take, and be fully prepared to actually not have any trade on the day time frame if the volume remains light and the ranges remain narrow. So off the open, this 96.5 to 98.5 important zone. If it holds, we'll look for an upside break. If the internals are quite mediocre and the momentum is not really there on the upside, then on the downside we could get a push down to 91 to 93. In the event of a high volume, high momentum move, there's potential to go down to 87.75 and 84 to 86. And given the overall volume situation, the 84 to 86 zone has potential to actually shut off the selling and reverse the market back up towards 91 to 93. So that's how the situation looks on the downside. On the upside, we're making new all-time highs, so there really is no hard resistance, aside from this pre-market resistance zone. So on the upside, 2008 to 2010 is an area where, given the recent volatility in ranges, we could hit some range exhaustion, and the market kind of top out there. But we do have to bear in mind that there is no, hard resistance above the all-time high of 2002.75. So those are the main thoughts heading into the open. Let's just keep a close eye on volume and momentum, and we'll take it from there.